What's going on, YouTube? This is Dave's Daily Trades, where I bring you daily AMC technical analysis, price predictions, and of course, the latest, greatest news. Definitely be sure to hit that like button and subscribe for more content as well. All right, guys, into today's video. So we definitely have an interesting one today. We are going to be going over the controlled squeeze that has been really floating around all forms of social media, and then also the new NSCC 2021-010. So definitely interesting, and as you guys can see here, I have quite a bit of notes and different articles to go through today. So definitely stick through to the end. One thing too, guys, leave some comments in the comment section below. Let me know what you guys want to hear on next videos. Things that you're confused on, things you need a little bit more clarity on. Very happy to post some future videos on what the viewers want to hear. And of course, guys, continue to drop those diamond hands and the gorilla emojis in the comments below. All right, guys. So of course, we did have a slightly green week for AMC, and as we can see, there are a few things in the pipeline. MACD looking for a bullish reversal. RSI coming off the lows at right around 38. So some things are really starting to get interesting. But really the biggest news article over the weekend is the NSCC 2021-010. So just one thing I want to cover here, and this is the entire document, guys. This is hundreds of pages long. I will link it in the description below. Feel free to take a read through. Personally, 369 pages was a bit for me, but definitely it was good to skim through a lot of the verbiage that is covered in this. One really interesting thing I found was right away on page 4. And I want to read this to you. NSCC understands that SFTs provide liquidity to markets and facilitates the ability of market participants to make delivery on short sales and thereby avoid failure to delivers, naked, in quotation marks, naked shorts, and similar situations. So guys, right there, just telling us, and we kind of know this, but I think this is a little bit more confirmation, that the NSCC knows and is very much aware of naked shorting going around. So I just want to pull this up with Investopedia real quick, just go through naked shorting, what it is one last time, and kind of a little background of what is actually going on. So anyways, we're just going to go through the key takeaways. I'll also link this in the description below if you want to read through this entire article. So naked shorting is now illegal practices of selling short shares that have not been determined to exist. So you sell a share that you physically do not have. Traders must first borrow a stock or determine that it can be borrowed before they sell it short. Due to various loopholes in the rules, which of course are now kind of closing those loopholes, the discrepancies between paper and electronic trading systems, naked shorting continues to happen. Some believe naked shorting plays an important and positive market role in price discovery. But of course, to the extent that it's going on, it is absolutely ridiculous. And NSCC 2021-010 is something that is going to be, or hopefully passed, to really put an end to naked shorting through some various things, which of course we're going to go through today. But of course, guys, I'm not even going to attempt to pronounce this guy's name here because I'm absolutely going to butcher it. But he actually posted something really, really interesting here about the term controlled squeeze and what this really means. So what does it mean? Why would it happen? And what benefits would this have on the overall market itself? So of course, the MOAS is something that's inevitable right now. It is going to happen with due time. So I know, guys, a lot of people are getting impatient here, but big things like this are going to take a little bit of time to play out. Anyways, guys, as pretty much everyone has been talking about, AMC, GME, BlackBerry, all the various quote-unquote meme stocks are literally going to destroy the market because of the unbelievable upside potential. So guys, on a short position, there is infinity of losses that a certain person can actually take, because on the long side, a stock can go to zero. That's totally fine. But when you're on the short side, you're betting that, okay, this stock could, hypothetically speaking, go to 10 million, which is absolutely ridiculous. And that's a very high-level extreme example, but of course, that's what goes on. So, of course, this would be a shit show for all of those hedge funds. And for them to cover those positions, they would have to pull out billions of dollars in their long positions to actually put the capital and the cash up to cover those shorts. And of course, one kind of fear that's been going on here is what happens if they literally don't have enough capital to put forth into those short positions. Now we have to have other market participants step in and pay for the wrongdoing of a few terrible, terrible, and idiotic hedge funds. And really what this controlled squeeze is and what it would do is these new regulations that have been coming out, they want to push this squeeze into a longer term effect. So we're talking weeks or months. Compared to a 3-day MOAS here, where we see AMC, GME, BlackBerry, all these stocks go absolutely parabolic and have a flash crash in the market. So they want to have some controlled behind this squeeze because they know it's going to happen. It really has to happen. But if they can control it, it's going to be much less for the overall market. But of course, the short hedge funds are still going to fall because, as they should, and the holders of AMC and all the other quote-unquote meme stocks will really make out like bandits in this. So really, one thing I want to look back at was the Archegos downfall, guys. So we'll just jump over this CNBC article right here. This, of course, was March 29th, 2021. But this was just to put into perspective what could potentially happen. And this is literally just one hedge fund here, guys. $20 billion, which is absolutely ridiculous. And as you guys remember, their biggest holdings were in Viacom, CBS, and Discovery, and then a few other companies. Looking back at these two stocks alone, I remember when this happened, it was something close to, within 2 days, 50% of the prices in those two securities fell, which is ridiculous. We're talking one hedge fund here that got margin called, couldn't put up the margin requirements, and had to pull out of their long positions in Viacom and Discovery to cover those positions, which is absolutely ridiculous. Now, guys, if we put this into perspective here, this is one company that had the downfall. Now, just put into perspective multiple companies. We're talking, in just throw hypothetical solution here, guys. Talk about 20 hedge funds. Imagine 20 hedge funds all pulling out billions, if not even in total, trillions of dollars out of the market. That's going to cause a lot of fear, uncertainty, and doubt with everyone in the overall market, and this could literally cause a giant flash crash, potentially even as big as the 2008 financial crisis, which is just absolutely insane, guys. So, of course, the NSCC and other regulatory bodies need to do something to protect this from happening. So this is really where NSCC 2021-010 comes into play. So, of course, what's the purpose of this, guys? Really, the overall purpose of this is the NSCC wants to protect the market from crashing in the event of mass sell-off from other hedge funds who are having the forced buybacks in those short positions and all the other various meme stocks. So what they are proposing is SFTs, which is Security Financing Transactions. And this is a new membership group to allow more liquidity for groups that are in bad shape, aka Citadel and other short hedge funds. So guys, what is this going to do? Why is this important? So in the position that short hedge funds are required to buy back all of their borrowed shares, what they have to do is they would essentially have to liquidate all their holdings. But instead of liquidating all of their positions, what they would do is take their long positions in, let's just say, Amazon and just the overall FANG stocks. They would take all of those long positions, or however much percentage of those long positions, pass that over to the SFTs. And when I say SFTs, Security Financing Transitions Group, in the equivalent of cash. So you take all your Apple shares, you give it to this group, they in turn give you cash. So there's no selling of stock. So of course the market's not going to crash. All that's going on is you're exchanging shares for cash, and that cash or collateral can be used to cover those short positions in all the various meme stocks. So of course that makes sense, and that could really prevent a market-wide sell-off and essentially crash. So, of course, this looks like a win-win, and this is just going over the basic, most important points of this new rule that is out there. So, of course, I haven't gone through this entire document 100% yet, but guys, it does look good, and this looks like a win-win for everyone because the short hedge funds and the overall market isn't going to die. The short hedge funds, on the other hand, yes, they're going to have some real big trouble, but also the retail investors who are invested in AMC, GME, BlackBerry, all the other meme stocks, they are going to make out. And just to put this all into perspective, what this means and how it's going to look. So option 1, and this is without NSCC-010. So, of course, we have the AMC MOAS. We go crazy. We make millions and millions of dollars, guys, but what's going to happen? Hedge funds need to cover their shorts. They sell all their Apple, all their Amazon, all their Facebook shares, which causes an overall market crash in just those securities at first, but then this domino effect causes the S&P 500, the NASDAQ, other people start pulling out, algorithms start picking up this crash, and the overall market just tumbles right before our eyes. And this is something that could happen in 2, 3, 4 days. Option 2, with the new SFTs in this new proposed rule change. So, of course, same thing's going to happen. We're going to have the AMC MOAS, same thing with all the other meme stocks. Hedge funds, instead of selling all their positions for collateral, they lend their long positions to the SFTs for cash to cover their positions. So they take their Apple shares, their Facebook, their Amazon, they give it over to this group. This other group now gives them cash and says, hey, here's some cash so you can go and cover these positions. So they're not sold, they're just exchanged from hand to hand, which, of course, is going to be very good for the overall market. So what happens? The AMC MOAS, GME MOAS, BlackBerry MOAS, all the other meme stocks, they go absolutely crazy. But the biggest thing, guys, is the market is going to stay stable. But, of course, what we all want, hedge funds crumble because now they literally gave their shares away, used the cash that they have on hands to buy back their positions, and they're pretty much dead cats. So that's pretty much a high-level overview, but there are a few different things that I'm thinking while I'm going through all of this. One, what happens if these short hedge funds are just like, no, I'm just not going to do that? You know, I don't read anywhere in here that they absolutely have to do this if they are in a troubled position. But, of course, there may be some loopholes, some other thing kind of written in here. Of course, I'm not a legal consultant. Don't really know too much about the whole legal side of things. So that's just what's going through my head and my ideas. And then, of course, on the opposite, guys, what happens if they lend all of their shares out for all of their Apple, their Facebook, their Amazon, whatever, and they have now more cash on hand to actually double down and short these securities again? Of course, as we all know, this would probably be the stupidest thing that they could possibly do. Yeah, they could drive the stock down a couple more dollars, but now they're out of all of their shares, and they literally have no more money to receive. So they're dead, and they're just going to screw over all of the other players in the game here. So I would almost throw that second theory out, but that's something that just was going through my head and I want to talk about. So guys, stay patient, hold the line, good things are going to come. Of course, this rule is, or this new proposed rule change is not into effect yet. It will be filed. It's going to go through all of that hearing, some testimonials, and of course, I actually read too that if you guys have ideas or your thoughts and your concerns about this, you can reach out and have your opinion heard. So definitely, if you guys want that, go and do that. Highly encourage it. But of course, this is really what I got out of reading just a little bit of this proposed rule change. All right, guys, that's all I have for today's video. I hope you guys all had a wonderful weekend. Rest up because we're going to have a big week ahead of us. Tune in for the next video and see you guys later. Peace out.